Good afternoon. I'm calling to order the House Committee on Consumer Protection and Commerce. It is Thursday, February 8th, 2024. It is 2 p.m. We're in conference room 329. Just as a reminder for testifiers, please come up to the podium when you testify. We do have 12 items on the agenda today, so we will be limiting testimony to 2 minutes. I will let you know when your 2 minutes are up. So when you, please wrap up your testimony then. First, today we have HB 2553 HD1 relating to pharmacists. First to testify on this measure, we have James Skowitsky, Board of Pharmacy and Support.
Good afternoon, Vice Chair and members of the committee. I'm James Skowitsky, Executive Officer of the Board of Pharmacy, here to stand in our testimony and to answer any questions. Thank you.
Thank you. Next, we have Department of Health and Support.
Hello, Vice Chair Sayama and Representative Otnishi. My name is Ron Balahadia, and I'm, I think that's right. I'm Ron Balahadia, and I'm the Immunization Branch Chief, and I will be representing the Department of Health. According to the U.S. Centers for Disease Control and Prevention, vaccination coverage among Hawaii kindergartners for routine recommended childhood vaccines, measles, mumps, rubella, diphtheria, etc., has declined nearly 10 percentage points between the period of 2017 and 2022 and remains below the U.S. national average. In the effort to ensure continued expanded access to immunizations in settings such as pharmacies, the Department of Health supports incorporation of the Federal PrEP Act authorizations in the Hawaii statute. As demonstrated during the COVID-19 public health emergency, pharmacies' ability to conduct mobile off-site vaccination clinics for seasonal vaccines such as influenza and COVID-19 also ensure continued options for school-located vaccination clinics. And I'm here to answer any questions if needed.
Thank you. Next, we have Ray Matsumoto from the University of Hawaii on Zoom.
Good afternoon, Chair, Vice Chair, and members of the committee. I'm Ray Matsumoto, the Dean of the Daniel K. Inouye College of Pharmacy at the University of Hawaii at Hilo. I stand on our written testimony and I am available to answer questions. Thank you.
Next, we have Lori Lum from CVS Health.
Good afternoon, Lori Lum on behalf of CVS Health, testifying in support. We also ask for your favorable consideration in an amendment to enable pharmacy interns and pharmacy technicians to administer all vaccines that can be administered by a pharmacist while under the supervision of a pharmacist. So this would be ages 3 and older. Thank you for the opportunity to testify.
Thank you. Next, we have Kimberly Mikami from Molokai Drugs in support on Zoom.
Good afternoon. My name is Kimberly Mikami Svetin, and we stand on the letter that was sent 2 days ago. Thank you.
Thank you. Next, we have Corey Sanders from the Hawaii Pharmacists Association in support.
Good afternoon. I just want to stand strongly on our testimony and support. I'm Corey Sanders, President of the Hawaii Pharmacists Association. I do want to take a couple seconds just to elaborate because I know you guys are going to be overlooking the ability of technicians and interns to provide vaccinations. So although the Department of Commerce and Consumer Affairs does not currently regulate pharmacy technicians, the responsibility of vaccine immunization ultimately falls underneath the pharmacist, not the DCCA, as was done in the PrEP Act. There'd be no additional workload required by the DCCA as pharmacies already have processes in place to conduct background checks and ensure that the appropriate national certifications are completed prior to allowing technicians to immunize. This is similar to the process for medical assistants that are also not regulated by the DCCA, but are currently vaccinating under the direct supervision of other healthcare providers in Hawaii. I'll also conclude by stating it would be crushing to the workload of community pharmacies to decrease the vaccination age while simultaneously taking away the support staff of pharmacy interns and pharmacy technicians that are providing a majority of those vaccinations. Pharmacists, interns, and pharmacy technicians have spent almost 4 years throughout the pandemic establishing a proof of concept that's resulted in exceptionally positive public health initiatives that we believe should be continued. I'll stand by for questions. Mahalo for the opportunity to testify.
Thank you. Next, we have Tiffany Yajima or Mihoko Ito from Walgreens.
On behalf of Walgreens, we stand in our testimony and support. Happy to answer questions. Thank you.
Thank you. Next, we have Daniela Wallace, individual in support on Zoom. Okay, members, we have written testimony and support from KTA Superstores, Times Pharmacy, American Pharmacists, National Community Pharmacists Association, Retail Merchants of Hawaii, and many individuals. Are there any other persons here to testify on this measure? Okay, seeing none, members, any questions? Okay, very good. Moving on. HB 1943 HD1 relating to health insurance. First to testify, we have Kamakana Kaimuloa United Public Workers in support.
Hello, Vice Chair, Rep. Onishi, Kamakana Kaimuloa, Government Affairs Manager, United Public Workers. UPW stands on its written testimony in support. I'd be happy to answer any questions. Thank you.
Thank you. Next, we have Randy Pereira from the Hawaii Government Employee Association in support.
Hello, Vice Chair Rep. Onishi. HGA stands on our written testimony in strong support. Mahalo.
Thank you. We also have written testimony in opposition from the Department of Budget and Finance. Oh, Budget and Finance here? Okay, go ahead.
Chair, Vice Chair, members of the committee, Sabrina Nasser, Deputy Director for Department of Budget and Finance. We are in opposition to this bill because we believe it infringes on the collective bargaining process. Thank you.
Thank you. Are there any other persons here to testify on this measure? Okay, seeing none, members, are there any questions?
Yeah, I guess I do have one. HGA? Oh, where's HGA?
Oh, at the back.
And maybe UPW, you can come up too. So the issue of it infringing on your collective bargaining rights, this would take this particular issue out of collective bargaining. What's your position on infringing on your collective bargaining rights?
Right. Right. Good question, Representative. It's our understanding that, should this measure pass, it would essentially cap health insurance costs at 1.5% onto the employee. I believe it's our understanding that we can still be able to negotiate it, but it would be up to that amount.
What would you be able to negotiate?
The cost of the cost of employee contributions. But however, it would be capped upon the Prepaid Healthcare Act, which is, I believe, 1.5% onto the employee cost.
Okay. UPW, same position?
Rep, we do take the same position. I think as it's reflected in our testimony, right? So a custodian who's making $39,000 on the high end pays the same amount for 75/20 HMSA 75/25 plan for an engineer FAR, right? So we're trying to look at a way of making the employee share more equitable, and we believe that this bill would do that.
So is it your guys' premise that a tiered system based on income is not negotiable with the state or with the employers?
Through collective bargaining, our experience has been that the employer share has been pretty much frozen historically through collective bargaining. So this is one way for us to sort of address that issue.
Well, I mean, I can remember where it used to be 60%, other unions had 40%, and now I think everybody's 50%. Is that correct?
So it would be, it's not 50%. It depends on the plan that an individual selects. So some of them are paying 40%, which is, in our opinion, too high at this point in time because of rising plan costs.
So not everybody's paying the same amount?
Well, everybody is paying the same amount, but we feel it's not equitable for those lower income earners.
Okay, but that's not a negotiable issue.
That is, well, it is negotiable, but the employers have not been willing to negotiate that.
Okay.
For Budget and Finance. So we just heard some discussion, right? And from feedback from UPW and HGA. I'm just curious if you could elaborate on your concerns of this measure when it relates to infringing on collective bargaining rights.
Absolutely. So just to Representative Onishi's point, the intent of this measure could absolutely be collectively bargained. And there are some plans where the employer contribution is actually 90%. So the most prevalent plan, the HMSA 75-25% plan, I believe the employer contribution is, let's see, yeah, 90%. And same with the Kaiser Standard plan, which is also a very popular health plan, is also 90%. And so the position of the department is that this should continue to be collectively bargained.
Okay. And in your testimony, you noted that all UTF plans already meet the requirements for PHC. Is that true for all UTF plans?
Yes. So in terms of the benefits offered.
Okay.
And so I think the issue here is the employer contribution for the specific plans.
I see. All right. No further questions. Thank you.
Thank
Oh, yes,
Yeah,
Representative
Vice
Onishi.
Chair, I forgot to mention, can you rule on a potential
Yes.
conflict? So previously, I was president for HGA.
Yeah.
And so I know I've questioned HGA and UPW on this issue, but just if you could rule on that.
Yeah. I guess Vice Chair's ruling is no conflict. Thank you. Okay. Seeing no further questions, we'll be moving on to the next measure. HB 1686, relating to insurance. First to testify on this measure, we have the Insurance Division from GCCA with comments.
Good afternoon, Vice Chair Sayama, Representative Onishi. Gordon Nito testifying on behalf of DCCA Insurance Division. We stand on a written testimony offering comments. Available to answer any question.
Thank you. Next, we have Allison Ueoka from the Hawaii Insurers Council with comments.
Good afternoon, Vice Chair Sayama, Representative Onishi, Allison Ueoka for Hawaii Insurers Council. We'll stand on our testimony with comments. Thank you.
Thank you. Next, we have Dean Shivers from the Hawaii State Chiropractic Association in support.
Hello, my name is Dean Shivers. I've been a chiropractor in Hawaii for 10 years and president of the Hawaii State Chiropractic Association. The reimbursement rates for chiropractors have been fixed for 30 years, and they're long overdue for an increase. We're not asking for a blank check, but rather a fee tied to the state-set workers' comp fee schedule. Right now, there are only 69 treating chiropractors on Oahu, and in my personal practice, we see a very small percentage of those are PI. So this increased rate would have a very minor effect on the financial well-being of the insurance companies. Next, HRS 431-10C-1036 was passed in 2017 for acupuncturists with the exact same language that we're asking for now, tying it to the workers' comp fee schedule. And I respectfully request that you consider reverting back to the original bill language, tying the charges to the work comp fee schedule. Thank you, and I'll be here for any questions.
Thank you. Are there any other persons here to testify on this measure? Okay, members, we do have written testimony in support from Turning Point Chiropractic, Hawaii State Chiropractic Association, Aloha Family Chiropractic, Turning Point Chiropractic, Dr. Jill Doyer's Family Chiropractic Clinic, Hawaii State Chiropractic Association, and 31 individuals in support. Members, are there any questions?
Sure.
Representative Onishi.
For Mr. Ito. You say that this may lead to an increase in motor vehicle insurance premiums.
Yes.
Have you guys gotten any estimates on what that might be?
Well, that's a little difficult in terms of trying to estimate the increase, because what's asked for in the original bill and is being requested that we put in, it's going to be based on cost per manipulation. If you look at the current work comp fee schedule, I believe for the chiropractors, it's about $30 and so many cents per manipulation. But they can do a number of manipulations. So I think the maximum could potentially go up to $200 per visit versus the 75 flat rate. So, as we stand here today, we don't know how much manipulation or what the actual cost per visit is going to increase to.
So, but this is capped per visit, right? So it doesn't
Currently,
matter.
it's been capped at $75 per visit.
Yeah.
But what they're asking for is to follow the work comp fee schedule, which changes it not per visit, but per minute.
Oh, yeah. I mean, not considering their proposal, their amendment proposal, but just based on the current version of the bill to raise it from 75 to 100. Do you know what an estimated impact would be to the
we
consumer?
could try to do an estimate of the increase from 75 to 100. And we could try to provide that to you.
Okay. If I can, to the, who's the chiropractor guy? Oh, Mr. Shivers? Yes. So, in your testimony, you said this would not affect the insurance providers. I mean, granted, it won't affect them if they raise their rates for the coverage, but it will affect the consumer who has to buy the insurance.
There's two things I'd like to point out. One is, like I said, there's only 69 licensed chiropractors on the island. Currently, 20 of them work for me at my business. And we looked at our numbers, and it was less than 1% of our patient base was from car accidents. So of that 1%, I mean, we're talking a few hundred people a month. A slight increase is such a small amount of money. And then
Hold on.
Okay.
But the insurance is everybody who has car insurance. It's not just the people you see. So the car insurance for everybody who buys car insurance, because that benefit would be tied to the policy, would go up, not just the people that you see.
And then the other point is there's what's called a PIP. So the insurance companies have a $10,000 cap that they spend on medical bills. And with this, even if it was the highest dollar amount of $200 per visit, we're still capped at a number of visits of 30 visits. So the most they would even be able to spend is around $5,000 or $6,000, which is still under the allotted amount that they have reserved for each car accident case.
But that's only for chiropractic service. It doesn't include injuries that might have been incurred during the accident, medical bills, etc. Right?
That's what the PIP covers, personal injury protection.
Right.
The $10,000.
But they could easily reach the 10,000 even before they go to the 30 visits.
They could, yes.
Yeah, okay. Thank you, Chair.
Okay. Seeing no further questions, we'll be moving on to the next item in the agenda. HB 1637 relating to workers' compensation law. First to testify on this measure, we have Jade Butai from the Hawaii Department of Labor and Industrial Relations in support.
Good afternoon, Vice Chair and Representative. Joanne Fittenhar from the Department of Labor, and we stand on our testimony supporting the intent and offering an amendment. I'm available for questions if you have any. Thank you.
Thank you. Next, we have Milia Leong from the Hawaii Insurers Council with comments.
Good afternoon, Vice Chair Sayama and Representative Onishi. Malia Leong testifying on behalf of Hawaii Insurers Council today. We stand on our written testimony with comments and available for questioning. Thank you for the opportunity to testify today.
Thank you. Are there any other persons here to testify on this measure? Please go ahead.
Aloha, Vice Chair, Representative Onishi, Don Karisu on behalf of HMSA. We just want to stand on our written testimony, but I do want to just point out just a few comments providing some changes to language in our bullet points number 1 and 2 in our testimony, and also probably the most important is number 3, changing the time frame back to the 60 days that's already currently in HRS, and want to just make clear that we're very supportive of timely resolution to work comp cases and definitely supporting all of the individuals who are affected. So thank you so much.
Thank you. Are there any other persons here to testify on this measure? Okay, seeing none, members, we have written testimony in support from the Hawaii Institute for Pain Primary Care Clinic of Hawaii, and 5 individuals also in support. We have written testimony in opposition from Society of Human Resource Management Hawaii. Members, are there any questions?
Yep, sorry, Chair. For Department of Labor. Hi, Joanne. Nice to see you again.
Good to see you too, Representative.
My question on your testimony is, what is the current requirement for health insurers when there is this issue where the employer's contesting the workers' comp claim?
So the work comp law and the healthcare law requires that they will provide benefits, so provide care for the injured employee, if it is work comp related or not.
So the current law already provides for coverage?
Yes.
By the health insurers?
Yes.
Why is it necessary to increase it to 90 days?
That's a good question, and the question really goes around investigating a claim. So, excuse me, we have claims that are denied, but they're controverted because they're under investigation. And typically, from the statute, you have 60 days to, well, actually, you have 30 days for an investigation, and you can ask for an additional time frame if you aren't able to complete the investigation in the 30 days. This bill, we think, was trying to expand that to 90 days just to find a medium as to what the average of an investigation is. But that's very difficult. Going back to the intent of the law is to allow the employer's due process to be able to investigate a claim. But oftentimes, maybe a claimant doesn't sign the release form for medical release of their documents, or the employer does not receive the medical reports timely, so that 30 days equates into longer. And so the employers come to the department and ask for an extension of time. And that normally is not a problem, but I think the 90 days was crafted just to try to find a better time frame as to what the investigation time frame should be.
So what happens after 60 days currently?
So currently what happens, work comp is very case by case, so it depends on the specifics. So if we find out that someone is stalling, we may just force a hearing. If we understand that there is a need for medical reports that hasn't been submitted, we have our facilitators in the office that we try to assist with facilitating properly to get those medical reports in. And so it is case by case that we look at it. So putting expansion of 90 days really doesn't do anything, because you can still come in and it is really dependent on the care for that individual case.
So does, at any point during this process, does care stop?
Care should not stop.
It should not stop, right?
It should not stop.
So this bill, which is tied into care,
Yes.
really is not necessary.
If you're asking for my
I mean, the current
opinion,
law
yes.
covers care, right?
Yes, the current law covers it.
Right. And so the time period may or may not be relevant, but the time period currently gives the department the ability to review the case within 30 days, or or after 30 days,
Or-
and decide whether an extension is warranted or even beyond a 60-day
Exactly.
extension.
And if we feel the need to have a hearing, we will, like I said, we will push a hearing through.
Right. So if we extend this to 90 days, then the department basically is waiting 90 days before they would have to make a decision on the case. So it would prolong the injured party's
Potentially it could,
time period before there might be resolution.
right.
Okay. Thank you very much.
Thank you.
Actually, if you could stay there, I do have some follow-up questions for DLI.
Sure. Just
And maybe someone could help her out with the.
There you go.
Very good. Okay, so for the amendments that you offered, you suggested striking out language from page 1, line 16 through page 2, line 14, which deals with the 90-day time period as well as the 3% fee. Following up on the previous conversation, I think if we strike this language out, does that revert back to the current statute, which is the 60-day time period?
Yes.
Okay. No, thank you for clarifying. No further questions.
Thank you.
Actually, I do have one for Hawaii Insurers Council. So I think the DLIR's proposed amendments, as I just mentioned, would address two of your recommendations or requests for amendments: the removal of the 90-day investigation and the removal of the 3% penalty. The last one, clarifying that the provider must reimburse the injured worker for out-of-pocket expenses. Can you please expand on that last request?
Sure. So in the denied pending phase, right, it's a trifecta. So if the prepaid is paying while we're pending investigation, then the medical provider will collect the copayment like we all do when we go to our visits under prepaid. So we just want that clarified, that it would be the medical provider would reimburse what they collected from the injured worker during that time frame if we end up accepting the claim. Otherwise, if it was us as the carrier, we would be paying in excess of what's allowed by the Hawaii State Medical Fee Schedule.
I see. I guess would you consider DLIR's amendments to cover that request that had been made in the written testimony?
For the 90 days?
No, for the clarification that the provider be reimbursed or must reimburse the injured worker for out-of-pocket expenses.
Yes, the medical provider. Yes,
Okay.
correct.
Thank you. No further questions? Oh, yes, of course. Representative Nishi, go ahead.
Yeah, thank you. For HMSA, since you guys are the only medical providers here, so I have a question about the request for reimbursement. So in the request for reimbursement, do you also ask for reimbursement for the amount, the copay that the injured person may have had to make?
I don't want to misspeak today, so I will go back and double check on that, and we can get that information to you. So, yeah,
Because
sorry, I
that
don't have
would
it.
seem like you're getting more than
Yeah.
you're supposed to be getting, right?
Correct.
If you keep that money and you also ask the employer to pay you for the entire cost that you've incurred.
Yeah. So I'll go back and double check for you, Representative.
Okay, thank you. Thank you, Chair.
Okay, thank you. Seeing there's no further questions, we'll be moving on to the next item in the agenda. HB 1673 relating to workers' compensation. Oh, wait. Yes. Okay. First to testify on this measure, we have Jade Butai from the Hawaii Department of Labor and Industrial Relations in support.
Again, Chair Sayama, Representative Onishi, Joanne Fittenhar from the department, and we stand on our written testimony in support and are available for any questions. Thank you.
Thank you. Next, we have Kamakana Kaimuloa from UPW in support.
Vice Chair Rep. Onishi, again, Kamakana Kaimuloa, United Public Workers. We stand on our written testimony in strong support. Thank you.
Thank you. Are there any other persons here to testify on this measure? Okay, seeing none, members, are there any questions? I do have a question for DLIR. I think in the previous committee, it was noted in the report that there should be a distinction between or consistency in the term trash versus solid waste. Do you concur with that, I guess, point of clarification?
Yes,
Okay. I just want to make sure that we have that consistent in the bill. Thank you.
thank you.
Oh, Representative Onishi, go ahead.
Yeah, for DLIR. In the bill, there's also an added section B. Any private healthcare plan violating this section shall be fined $10,000 or triple the amount of medical costs incurred by the injured employee during the time the claim is under investigation, whichever is greater.
So that's on the previous bill?
Yeah.
You want to go back to the previous bill?
Well, I mean, it's in this version, right, the updated version, the HD1.
On the HD one for the previous bill?
1670.
I can
Oh,
go
no.
back and, I can go back and,
1673, not 37.
1673. Oh,
it's
1637.
just
Oh,
that
I'm
the
sorry, I'm
numbers
sorry,
are
I'm sorry.
flipped. I
My
know,
bad, my bad.
3773.
My bad, I'm sorry.
It's
I'm looking
okay.
at the wrong bill.
Okay,
Thank you.
thank you.
Okay, if there are no further questions, we'll be moving on to the next item, HB 2552 HD1 relating to employee benefits. First to testify on this measure, we have Jade Butai from Hawaii Department of Labor and Industrial Relations in support.
Aloha, Representative Sayama, Representative Onishi. This is Peter Lee for the Department of Labor and Industrial Relations. We stand on our testimony and support. Happy to answer any questions.
Thank you. Next, we have Constance Yonashiro from the Hawaii Civil Rights Commission in support.
Good afternoon, Vice Chair and Representative Onishi. The HCRC stands on our written testimony and will be available for any questions. Thank you.
Thank you. Next, we have Aki Marasiu, individual in support on Zoom. Not present. Okay, are there any other persons here to testify on this measure? Seeing none, members, we do have written testimony in support from the Department of Human Services, Hawaii Children's Action Network Speaks, and an individual also in support. Members, are there any questions?
Yeah. Who was first to testify? Department of Labor?
Yeah.
Oh, Department of Labor? Hi, thanks for being here. I'm a little confused with some of the wording in this bill. On page 4 of the bill, lines 14 to 17, it says, shall be entitled to additional family leave equivalent to the duration the child is in neonatal intensive care unit for up to 8 weeks, starting from the date the child is discharged from the neonatal intensive care unit. I don't understand what that says. I mean, I think it says that if a child's in the neonatal intensive care unit, they can have an additional 8 weeks.
Yes, correct.
But I don't know what the starting thing really means. So it says starting from the date the child is discharged from the neonatal intensive care unit.
Yeah, the date is, the start date starts the day one of the additional days up to 8 weeks. So they have 4 weeks in family leave, and this measure offers 8 additional weeks starting after they are discharged from the ICU.
Okay, so the entire time that a child's in the neonatal intensive care unit, the employee can be on family leave,
No,
or only for 4 weeks?
so the time that the child is in neonatal ICU starts, that time where that child is in there is counted towards the back end, where it will start when the child is discharged.
That is really confusing. Okay. So an employee has a child born, they're in the neonatal intensive care unit. When does their family leave start?
When the child is discharged out of the neonatal intensive care unit.
So what happens to that employee prior to that, if they have to provide care to the child while they're in the unit? They're not on leave? I mean, they may have sick leave, right?
Yeah, they may have sick leave,
Okay, but they wouldn't qualify for family leave.
not yet, until we
What if
determine,
they run out of sick leave?
then family leave would kick in. Well, they have 4 weeks of family leave, yeah.
Okay, but there've been children that've been in there for like months, you know?
Yeah.
Just in the neonatal intensive care unit.
Yes. This measure caps it at 8 additional weeks.
That's after
Yes.
they get discharged.
Yes.
But I'm talking about what happens before. So is there any gap before?
I'll take that question back to the department, and I'll get back to you.
Okay,
Is that okay?
okay, thank you.
Okay, any further questions? Seeing none, we'll be moving on. HB 2606, HD1 relating to transient accommodations. First to testify, we have Daniel Naho OPE from the Hawaii Tourism Authority with comments. Okay, not here. Next, we have Corey Terayama from on behalf of a number of hotel operators and owners in support.
Vice Chair Sayama, Representative Onishi, Corey Terayama on behalf of various hotel owners and managers. We would like to rest on our written testimony, though I did want to highlight that we have a requested amendment to include a definition for person. Thank you.
Thank you. Are there any other persons here to testify on this measure? Seeing none, members, we do have written testimony with comments from Hawaii Realtors, a written testimony in opposition from the Chamber of Progress, and an individual in opposition. Members, are there any questions? Okay. Seeing none, we'll be moving on to HB 2195 relating to building industry professionals. First to testify on this measure, we have Sheena Choi from the Board of Professional Engineers, Architects, Surveyors, and Landscape Architects with comments.
Good afternoon, Vice Chair, Representative. My name is Sheena Choi, Executive Officer of the Board of Professional Engineers, Architects, Surveyors, and Landscape Architects. The Board would like to stand on its written testimony, and I'm available for any questions. Thank you.
Thank you. Okay, are there any other persons here to testify on this measure? Yes, Vice Chair. Oh yeah, please come up.
Good afternoon, Vice Chair and Rep. Onishi. I'm sorry, I thought we submitted written testimony in opposition, Hawaii Solar Energy Association.
Oh, we do. I just asking if there's anyone who wanted to talk.
So we do have written testimony. I'll stand on our written testimony, but let me just summarize. We are in strong opposition to this bill. However, if the committee is inclined to pass it out, we ask that you adopt our amendments. Thank you. And I'm available for questions.
Thank you. Any other persons here to testify on this measure? Seeing none, members, any questions? Seeing none, we'll be moving on to HB 2801 relating to commercial property assessed financing. First to testify on this measure, we have Hawaii State Energy Office in support. Okay, not here. We'll be moving on to Gwen Yamamoto Lau from the Hawaii Green Infrastructure Authority in support.
Good afternoon, Vice Chair and Representative Gwen Yamamoto Lau, Hawaii Green Infrastructure Authority. Standing on my written testimony in support, but I did want to emphasize that this is a commercial, not a residential financing program, that we have existing statutes that requires lender consent, and that special assessments will not be placed on real property tax bills for the condo owners. Thank you.
Thank you. Next, we have Nicholas Zuba from CPACE Alliance, Inc. in support on Zoom.
Thank you very much, Chair, Vice Chair, and members of the committee. I will just elect to say that I'm standing on my written testimony today and speaking, of course, in strong support of the passage of the bill. Thank you very much.
Thank you. Next, we have Michael Yaki from the Petros Pace Finance, LLC in support on Zoom.
Thank you very much, Mr. Chair and Vice Chair. Michael Yaki, Petros Pace Finance. We stand on our written testimony in support and are available for any questions. Thank you.
Thank you. Next, we have Lindsay Garcia from Hawaii Realtors in support. Thank you. Next, we have Stephanie Sakamoto from the Hawaii Credit Union League in support. Oh, sorry, with comments, yes. Thank you. Next, we have Mihoko Ito from the Hawaii Bankers Association with comments. Oh. Thank you. Okay, are there any other persons here to testify on this measure? Okay, seeing none, members, we do have written testimony in support from CAI, Palihua Townhouse Association, Hawaii First Realty, Nuvian Green Capital, CPACE Lending, Pace Loan Group, Castle Green Finance, Hawaii Insurance Council, Pats at Punala'u'u, Zephyrs Insurance Company, Tradewind Group, Plumbers and Fitters UA Local 675, Hawaii Energy, Hawaii Solar Energy Association, Mortgage Bankers Association of Hawaii, AARP, and 3 individuals in support. Members, are there any questions? Seeing none, we'll be moving on to HB 2686 relating to the stabilization of property insurance. First to testify on this measure, we have Gwen Yamamoto Lau from the Hawaii Green Infrastructure Authority in support. Thank you. Next, we have Insurance Division, State of Hawaii, DCCA, with comments.
And good afternoon, Vice Chair Sayama, Representative Onishi. We actually are supportive of this bill. Our comments is regards to some of the post-catastrophe assessments, inconsistency in one area. The other thing that it's not in the testimony, but I wanted to note was in 431P 16E, which is on page 55, line 7. There's a deletion of the assessment post-catastrophe surcharge from 7.5% to 2%. When we did the calculation in terms of the amount, based on the 2022 premiums, it would have gone down at 7.5%. We would have collected $210 million post-catastrophe surcharge. Going down to 2%, it drops it to $55 million for a net loss of potential assessments or surcharge of $155 million. So that's really our comments concerning the way the bill is written. However, I'd like to note that we are very supportive of this bill. The Hawaii insurance market is in an extremely hard market right now. Availability is becoming an issue. Pricing has gone up substantially. There's been a number of reasons why insurance premiums are going up. One of them is the reinsurance costs has gone up significantly. Reinsurance is what basically companies buy to transfer their risks. Or a portion of their risks. Inflation, interest rates, supply chain, material costs, labor costs have all gone up, which has contributed to increased losses or the cost of repairs. So there's been a number of factors. We are starting to see issues with respect to availability in the condo market, particular in condos that have older buildings. What this bill does is create a backstop. In the worst case, if we do run into increased availability issues, we could reactivate potentially the Hawaii Hurricane Relief Fund to provide hurricane coverages. We're starting to see issues on hurricane coverage in the AOAO master policies. So that would provide an option if the market gets really bad. With respect to HPIA, again, with the condo, if there's issues, or the general insurance market, if availability becomes an issue, not only for condos, but homeowners, will have a backstop to have at least a place where people could purchase property insurance. So that's really what the intent. We're fully supportive of the intent of this bill, and what we're doing is really just preparing for the worst case scenario. I'll be glad to answer any questions. Thank you.
Thank you. Next, we have Gary Suganuma from the Department of Taxation with comments.
Vice Chair, Representatives, my name is Garrison Kurth with the Department of Taxation. The department stands on its written testimony providing comments on administration, and I'll be available for any questions. Thank you.
Thank you. Next, we have Mike Onofriedi from the Hawaii Insurance Council in support.
Good afternoon, Vice Chair Sayama, Representative Onishi, Representative Purick. Am I pronouncing that correctly? Sorry about that. Our testimony is in strong support. I'd just like to summarize a couple of key points. So one of the most important parts of this bill is that the capital to support HPIA and HHRF will be derived from others impacted, not just the insurance industry. And these funding elements are critical for two reasons. First, insurability issues. Old condo buildings are experiencing frequent and extensive water damage losses due to failing pipes caused by a lack of required maintenance. The decision to inadequately fund plumbing updates as part of the building's reserve fund is a condominium management issue resting with the AOAO boards of directors. Second, mortgage lending issues. Fannie Mae and Freddie Mac are requiring that hurricane coverage be equal to a condominium building's replacement value. Fannie and Freddie are unwilling to buy loans from mortgage lenders when this requirement is not met. So this highlights that what we're trying to do in the bill is resolve really not insurance issues, but an insurability issue and a banking issue at the federal level. Both of these above issues create challenges when closing real estate transactions, which directly benefit non-insurance entities. Without additional sources of capital, virtually all the funding will be derived from insured businesses and consumers, including individuals and businesses that don't even own property. So we believe that other entities impacted should contribute to stabilizing the market, and we're available for any questions should you have any. Thank you.
Thank you. Next, we have Lindsay Garcia for the Hawaii Realtors with comments. Thank you. Next, we have Tom Yamachika from the Tax Foundation of Hawaii with comments on Zoom.
Yes, good afternoon, members of the committee. This is Jade McMillan on behalf of Tom Yamachika for the Tax Foundation of Hawaii. I just wanted to note that we have submitted some comments on the measure. Our comments are concerning the changes in the CAT and the and the conveyance tax. We'll stand on a written comment. Thank you.
Thank you. Next, we have Stephanie Sakamoto from the Hawaii Credit Union League in support. Thank you. Next, we have Tiffany Jima or Mihoko Ito for the Hawaii Bankers Association in support. All right. Next, we have Matt Tsujimura from State Farm with comments.
Afternoon, Vice Chair, members of the committee, Matt Tsujimura on behalf of State Farm. We'll stand on our written testimony offering comments, and State Farm would just like to express its thanks to the legislature for taking a look at this issue. Thank you.
Thank you. Are there any other persons here to testify on this issue? Okay, seeing none, members, we do have written testimony in support from CAI, Palehua Townhouse Association, Hawaii First Realty, NAMIC with comments, supportive testimony from First Insurance Company of Hawaii, Honolulu Tower AOAO, Zephyrs Insurance Company, Hawaii Property Insurance Association with comments, Tradewind Group in support, an insurance company in support, Mortgage Bankers Associations of Hawaii in support, and 4 individuals in support. Members, any questions? Yes, Representative Onishi.
Yes, for Mr. Ito, please. So, if I read this bill correctly, there are 4 funding mechanisms, correct?
Yes.
Okay. So, have you guys analyzed these funding mechanisms as to how much they would contribute?
Not fully. I mean, I think some of my staff had looked at the conveyance tax as well as the transit accommodation tax. And I don't have the numbers, but we can provide it to you.
Okay. My follow-up question is, how does this legislation allows lenders to meet the requirements of the secondary mortgage market?
Okay, so kind of to follow up on Mr. Onifredi's comments, what's happening in the market right now, especially with certain condo buildings, is that on the hurricane coverage for the master policy for the building, lenders, but insurers have contracted how much risk they want to write in Hawaii. And so there were for example, one insurer that was initially intended to, I believe, pull out of the Hawaii market. But instead, what they did was they put a maximum limit of, I think, about 30% coverage on the AOAO master policy for hurricane. Also, there's been substantial price increases on the hurricane coverage, in part because the reinsurance costs have gone up between 20 to 60% the last 3 years, every year. And that's as a result of worldwide catastrophes. Reinsurers have lost $100 billion a year for the last 4 out of the last 5 years. And so the rates have gone up a lot because of the losses, as well as the interest rates increases that actually have caused money to flow out of the reinsurance market. So what's happening with the condo, in not all condos, but particularly more so in older condos, they're either going or purchasing maybe up to 30% coverage on hurricane. They're not covering the remainder 70%. Freddie and Fannie is requiring 100% coverage. What Freddie and Fannie are now doing is saying they're not going to buy any loans on buildings who are not fully insured. And that has a ripple effect through the banking industry as well as the real estate industry. Because if you're trying to sell a unit or buy a unit in that building and Freddie and Fannie are not willing to buy the loans from that building, then the lenders are not willing to issue loans on that building. And that's impacting, again, the ripple effect through the financial and the real estate market. It's kind of, in a small sense, what happened after Hurricane Iniki, where insurers pulled out of the market. You couldn't get insurance until we restarted the HHRF on the hurricane coverage. You couldn't even, in many situations, even get motor vehicle insurance because it's tied in. There's a lot of times they bundle a policy with home and motor vehicle. So my concern is we don't want to get into that situation. I think we need to address the issues. You know, Mr. Onifredi had talked about the older condos and the water losses. Because of the aging infrastructure, the aging pipes and the sewer pipes, it's causing significant water loss and water loss damage in the condos. We need to take a proactive step to mitigate those losses, like fix the pipes, because really what's going to end up happening, and already to a certain extent is happening, is that premiums are getting so expensive that condo associations are either just buying what they think is a reasonable amount because either they don't want to pay $1 million for their premiums. In some cases, that's what's happened to condos in Hawaii. It's gone maybe from $100,000 to a $200 premium per year to over $1 million. I know one of the insurance agent who does a lot of condos, she's encouraging And she kind of gave warnings in terms of condos. You need to take issue and fix your problems, because the end result is they're spending $1 million plus in premiums, which could have gone to fix some of the issues on the infrastructure. It's going to get worse unless we are or start to take action to fix and address these issues. So that's in part what we're trying to do with the bill. The bill will try to help the insurance part, but the larger thing, as I said at the Senate hearing, insurance is frequency and severity. If we can address issues on frequency or severity of a loss, how often an accident occurs or the severity, then we can keep insurance premium stable. If it's a situation where we lose control of frequency and severity, which is what is happening in the property and casualty market, not only in Hawaii, but in the US, and not only in condos or homes, it's on motor vehicle too. The loss ratio for homeowners and motor vehicle nationwide is 112 and 113%, which means for every dollar in premiums the insurer collects, they're losing 13 cents, right? So that's where we need to address frequency and severity in part. And that's what, in part, this bill is trying to do.
So the issue in the market in Hawaii today is that the current insurers are only willing to do a portion of the coverage.
Well, it depends on what coverage. So right now, fortunately, in terms of the fire coverage, there are insurers that are still willing to write the AOAO policy, master policy. As far as the unit insurance coverage, your unit, there's still availability, and the premiums are pretty reasonable. It's really the AOAO hurricane that's an issue, but that's not to say it's going to expand into all types of coverage. I mean, I grew up on the Big Island.
So, but basically, that's what it is, right? They're only willing to cover a certain amount of the value with insurance coverage. And this is the attempt to cover the rest so that these entities, these buildings qualify for the secondary mortgage market.
Yes. That's in part of what the intent of this bill is, to provide an option to cover the remainder.
Okay. How do you determine what is the reasonable premium provided to these guys? Is it based on what the private sector is charging, say 30%? So we're covering 70%, so then our premium's going to be, 70% more than, the coverage of the private guy.
That's going to depend, I think, that's a very good question, Representative. Right now, it really varies from building to building when you talk about condos or even homeowners, a regular home. What's going to happen with this, if the HHF is reactivated, is that there's going to be building by building assessment in terms of risk for hurricane, right? And what's the potential loss? And so ideally, the private market still retains the 30% or is willing to insure the building. And so it's trying to estimate what is the additional cost to prevent, and what's the probability of loss above what the 30% they already have in coverage. And then we'll see what the appropriate rate would be to cover that potential risk.
But, there's potential risks, but the mortgage reinsurers are requiring 100% coverage.
Yeah.
They're not asking for a percentage of the risk.
No, I'm just talking about rates.
No, I understand, but when you set your rate, it has to be upon the full coverage, right, of the building, not the percentage of risk.
Yeah, that's correct. So we're hoping that the private market that are limiting certain buildings to only covering, say, maybe 30, in essence, 30% of the risk, and the additional HHRF policy covers the remaining 70%, so you have a full 100%
Right.
coverage. So if there's a loss on a condo that still falls within the 30%, like say a $30 million coverage on a condo that's worth $200 million. If the damage to that property falls below that $30 million in the initial voluntary market, then it doesn't even hit the upper layer of which is right now and under,
So the
in some
private
cases,
sector would be first,
Yes.
primary.
Yes.
So the premiums for this programs, those premiums would go into the fund?
What this will do initially is get funds from, and I hope is from various sources to contribute into basically the restart of the HHRF. And so what you need initial monies to hire staff, buy reinsurance to come up with a policy, to do an underwriting in terms of how much the risk on a building is. So you need to do and get that all into place. And the assessments is intending to get the monies where we will be able to restart HHRF if it's so determined it's needed.
So if we pass this bill, I don't recall seeing that portion. The costs for startup.
That's the way Chapter 431P is structured, which is the Hawaii Hurricane Relief Fund that was created after Hurricane Iniki.
Right.
There was the initial assessments of money to get the HHRF operational, and then to buy also additional coverage, create the policies. There's a board of directors that make the decision on whether a restart is needed, hiring staff to operate. And so HHRF is dormant right now.
Yeah,
We
so
shut it.
that's what I mean. I mean, there's nothing right there. I mean, do they still have a board?
The way the law in 431P is, yes, you still have a board of directors.
No, there's still members on the board?
Unfortunately, we've been trying to get the board of directors fully staffed, but right now we don't have quorum. I mean, we don't have board of directors on HHF at this time.
Okay, what about staffing? Does staffing still exist?
No.
So there's nothing
There's
there.
nothing except the law in the books.
But you'd have to restart it,
Yeah.
right? The governor would have to appoint new members or more members.
The governor, the Senate president, and the speaker.
Yeah, and then the board would have to start hiring people and,
If it makes a determination that there's a need to restart HHRF.
well, it seems like we're doing all this because there is that need. I mean, but anyway, okay, so the premiums would go back into the funding,
Yes.
the total fund.
Yeah. So once it gets restarted, like how it happened after Iniki, the premiums it should have paid for the operation of the HHRF and to cover the risks that it's assuming.
Okay.
It's like an insurance company.
So does the fund and the board have the ability to require mitigation of the insured, right, to mitigate risks? So for example, you're saying that there are many condo buildings, right, with old piping, right, or, other material defects in their building that haven't been addressed by their boards, by their condo boards, and some of them are unwilling to do it. Do we have the ability to force them in order for them to get insured?
That's a very good question, Representative. Within 431P, there is a provision on mitigation, and there is an obligation on the HHRF to look at ways to encourage and do mitigation within the existing law.
Encouragement is different from requiring, right? Because, your risk is determined upon, right, the building itself
The condition
and its
of the
condition.
building, yes.
And if there's no improvement, the risk gets higher.
But when you just going back to the bill, like, for HHF, we've been talking about HHF, it will cover hurricane risk. HPIA is the entity that potentially would cover the water loss, fire loss kind of risk for condominiums. So there is a statutory provision for HPIA. So this bill is structured, if there's a need for hurricane coverage, then HHF would potentially be the entity that provides hurricane coverage. If there's a need for fire or general liability coverage, or basically the AO master policy coverages, then HPIA potentially is the entity that will cover the condo risks besides hurricane.
Okay.
And then and right now, fortunately, on the voluntary market, the regular market, there is enough insurers to cover the condo unit. So you and I, if we own a condo unit, we could buy insurance to cover what's inside the unit. The AO master policy covers the outside of the building and the common areas.
Okay, okay. So I have a follow-up for DOTAX. Sure. DOTAX. So these 4 funding provisions, do you have any numbers?
I do not. There's enough empty blanks in this bill that it would be wild guesstimations, I think, at this point. But I can go back and ask if there's any, but I just think at this point it's too early to be able to put numbers on it.
Okay. Are you aware that there are a number of legislative bills to amortize or eliminate short-term vacation rentals?
I'm aware there are. I'm not personally familiar with them.
So if we were to pass those bills forward, wouldn't that have a direct impact on the amount of funds that the TAT provision would provide to the fund?
Well, yeah, if you're talking about passing something that would take this funding away, it seems like that.
Well, it's not taking it away. It's going to reduce the
Reduce it,
number
yes.
of short-term vacation rentals.
Yes.
Right? So to the point where, in some cases, the bill calls for none, no short-term vacation rentals.
Right.
So I hope as you try to figure out the value or the amount of funds that would be raised, that you take that into account and
Right.
as, bills passed or don't pass this session.
Right, yeah. I'm sure our research and planning department looks at all that in the macro and microeconomics of what's going on, so.
Okay, thank you. Thank you, Chair.
You're welcome.
Members, any further questions? Okay. Actually, I do have a follow-up with DOTAX, I'm sorry. So in your testimony, you do note that there are going to be some challenges to administering some of the funding mechanisms, specifically the tax on transient vacation rentals. I'm just curious, does the department require additional resources to meet these challenges, administrative challenges?
I'm not aware of that. I, again, can go back and ask if there's administrative challenges or they require additional resources. I think the main thing here is just there's enough changes and concern with how different counties may define these matters to keep track of. So, but whether that would require additional resources, I'm not aware of.
Okay.
I can
Thank
find
you.
out.
And for DCCA?
Thank you.
So I do want to go back to kind of the comparison between the HHRF, I guess, when it was initially conceived versus, I guess, the proposal we have today and what we want to use the fund for. It seems to me, at least how it was described in the testimony and the preamble of this bill, that there's an immediate need for this kind of hurricane coverage for condo properties. Does the HHRF have sufficient capital to start underwriting if it were to be reactivated for this purpose?
Well, currently, there's about $169 million in the HHRF reserve. As to whether that's going to be in part utilized or based on assessments that is contained within the bill, that's something the board will have to determine in part also in consultation with the state.
Okay. Are you familiar with any, so say we pass this bill, right? Like you mentioned with Representative Onishi, there still needs to be a board that sounds like it needs to be filled to have quorum, and they need to make decisions on how the fund will be operated and administered. Is there any conversations in tandem with this bill that, the governor is looking to appoint, or Speaker or Senate President is looking to appoint and refill this board?
I can say that the governor and the Speaker, as well as Senate President, I think they are looking for potential board members.
Does that board have to be filled prior to this bill's passage?
Well, we would like to ideally have it. I mean, in the past, after the deactivation or inactivation of HHRF, there was actually a board, and every year the board would meet to continue reviewing like investment policies of the principal that's remaining and other items. And that was the limited scope of what they did. And before I forget, kind of in response to Rep. Onishi's question about mitigation on the water losses. I mean, within the bill for HPIA, I mean, there are provisions that encourage or try to encourage the condos that have issues to address the issues. If not, the maximum amount of time they could be provided coverage under HPIA if there was a need for coverage for the water and the fire loss. A maximum of 5 years. So it's really the intent to try to encourage condos that have issues to start addressing it.
Okay. When you say, right, there's a difference between encourage and require. If, say, a condominium, an AOAO, were to approach HHRF requesting policy coverage, would HHRF be able to say, hey, look, you don't have sufficient funds in your reserve requirement to be able to finance, necessary repairs that kind of are the underlying factor or issue, right, with the insurability of these properties?
Well, we have to keep in mind with respect to the hurricane risks, right? I mean, it's different in terms of the building versus the regular master policy that covers the fire loss or water loss or liability loss. That's still, fortunately, the insurance market, there's a market that's providing coverage on those types of risks, on what is the fire, water type liability losses. It's really, the struggle right now is on the hurricane coverage. Okay. That's the issue that's occurring. And so when you look at the risk from the building, it really varies. I mean, it's different.
Thank you.
I got a follow-up.
Oh, yes, Representative Ishii.
For Mr. Ito. So, hurricane liability, right? I mean, worldwide, how much loss was specific to condo properties? I mean, because you would think that most condo buildings were built to withstand a certain amount of hurricane events, right? So,
So maybe I know what your question is. I mean, yes, it's true with respect to condos. It really depends on type of construction, whether what building codes was in effect. In terms of the new building codes, I think the windows have to withstand maybe a Category 3 wind speed. But with respect to the issue in terms of availability of hurricane, it's not only limited. Right now in Hawaii, the real impact is with condos. But with respect to hurricane coverage as a whole, going back to the reinsurance, right, and the cost of reinsurance, what's really happening is that hurricane riders are looking at how much the reinsurance cost is, which is, again, had gone up from 20 to 60% the last 3 years or so. So they're saying, can I afford to, and how much coverage can I write? So even in Hawaii, not condo related, there are some hurricane riders who are considering exiting the market. If any one of those hurricane riders exits the market, then we would have an immediate availability problem. I've been dealing with several hurricane riders that have intended to withdraw from the market, and we're trying to keep them in the market. So at this point in time, the market, there is availability, but that could change at an instant.
So is this more the threat to single-family homes?
In the worst-case scenario, if one of the hurricane riders did exit the market, then I think it will not only impact condos, but single-family homes.
Okay.
Because those hurricane riders write both. We will not have availability for single-family home coverage.
Okay. Final question, Chair.
Yes, please go ahead.
So, do you have any idea what is the current total potential liability that we would have to cover?
No, that's going to be determined. I think on the condo, in yesterday's testimony, Hawaii Insurance Council mentioned on the condos might be about $30 billion or so.
Oh, please,
Can you please come up? Yeah.
And, as Commissioner Ito was saying, we have to sort of bifurcate the bill. There's a hurricane piece and there's the non-hurricane piece. On the non-hurricane piece, the exposure is probably around roughly $40 billion because there are somewhere around 400 older buildings that are in need of some sort of a plumbing upgrade. Some of them are able to get insurance. The concern is some others may not. On the hurricane side, it's a little harder to tell, but let's say that if you got a building that's worth $100 million and the building is able to get $30 million of coverage, HHRF could write that $70 million. What we don't know is how many buildings would need that. Now, HHRF would not necessarily keep all of that liability. There's something called facultative reinsurance, which is insurance purchased on an individual building basis, and the commissioner was sort of alluding to that. You look at each building and make a determination of what the relative risk is for that building. So if the building is inland and it's generally in good shape, it's got good windows, the premium might be lower than a really old building with old windows that can't withstand hurricane-strength winds that are closer to the shore. So there are very many variables in this that we really don't know the answer until we start putting some buildings in there, unfortunately. But they're both entities, HHRF and HPIA. One of the things they will certainly have to do is buy reinsurance to protect their portfolio of business as well.
So how much would the fund need to be capitalized in order just to cover the $40 billion?
It's a good question, and it depends. So if it were my insurance company, and I am not on the HHRF board, I don't think I would be appointed to it, but if I were in their shoes, for each building, I would try to buy reinsurance specific to that building up to that limit to the greatest extent possible. So again, using the example, there's $30 million of coverage. I would go to the facultative reinsurance market and say, I need coverage from $30 million and $1 up to $100 million. And I would pass that reinsurance premium on to the building owners. So in that case, there's no additional exposure for HHRF. As Commissioner Ito was describing, let's say a hurricane insurer pulls out of the market entirely. So now instead of that building having $30 million of coverage, it's got zero. So HHRF would not be able to get a full $100 million of coverage. They would have to retain some amount. Let's say it's $5 million. And then the other $95 million goes to the reinsurance market. So again, there are many, many variables. If HHRF buys reinsurance the way I describe, the capital should be okay. If the market for single-family residences, we lose a big hurricane rider, that becomes a little bit different. And then a lot of the capital that already exists in HHRF would be required to buy reinsurance to protect those single-family homes. So it's, I wish I could give you something that was, firm, but there's a lot of things in the air right now.
But isn't the problem with the reinsurers that they're not willing to buy, or to insure liability?
The issue is primarily the cost of the reinsurance, and to some extent, so there are multiple types of reinsurance coverages. The one that companies like my company, I'm with Island Insurance, use is called a reinsurance treaty. So we buy it, and it says, okay, Mike, you can write X billions of dollars of stuff, and that's how much, and you'll get a certain amount of coverage based on exactly how much you write. In the treaty reinsurance market, there are two things happening. One is the premiums are going way up. That's been happening for several years, but after the Lahaina fires, it's been exacerbated, and reinsurance premiums in some cases are up 60%, in some cases more. The facultative market is a little bit different because they're looking at it risk by risk, and they can charge whatever they think the right premium is for that specific risk. So there is some reinsurance capacity available, but it's going to be very, very expensive. And it's very expensive for voluntary insurers as it will be for HHRF and HPIA.
Okay, thank you. Thank you, Chair.
Okay, thank you. Any further questions? Okay, seeing none, we'll be moving on to the final item in the agenda today, HB 2685 HD1. First to testify on this measure, we have Gwen Yamamoto Lau from the Hawaii Green Infrastructure Authority in support.
Vice Chair Representative Gwen Yamamoto Lau, Hawaii Green Infrastructure Authority, standing on my written testimony in support. I'm available for questions. Thank you.
Thank you. Next, we have Michael Angelo from the DCCA Division of Consumer Advocacy with comments.
Good afternoon, Chair, Vice Chair, member of the committee. My name is Michael Angelo. I'm the Executive Director of the Department of Commerce and Consumer Affairs Division of Consumer Advocacy. We stand on our written testimony providing comments. Thank you. Available for questions.
Thank you. Next, we have Leo Sunshin from the Public Utilities Commission with comments.
Good afternoon, Vice Chair, members of the committee. I'm Ashley Norman, Utility Analyst with the Public Utilities Commission. We stand on our written testimony, and I am available for questions. Thank you.
Thank you. Next, we have Lindsay Garcia from the Hawaii Realtors in support. Next, we have Sandy Wong, individual in support. Thank you. Are there any other persons here to testify on this measure? Okay, seeing none, members, we do have written testimony in support from CAI. CAI, Palihua Towers Association, Climate Protectors Hawaii, 350 Hawaii, Hawaii Solar Energy Association, Hawaii Bankers Association, Mortgage Bankers Association of Hawaii, Hawaii Credit Union League, 2 individuals, and we have written testimony with comments from the Department of Budget and Finance. Members, are there any questions?
Yeah, Chair.
Yes, Representative Onishi.
Yeah, for Gwen, if you could. So this program would allow people of certain income level to come together, whether they're in a multi-family environment, to set up a solar system.
What it would allow is condo unit owners who are locked out of solar because they don't own their roof to participate in solar by investing in a hui. And with the funds, we will then install the solar systems on Alice households so that we reduce their energy burden. The condo owner will then get the tax credit and cash flow benefits from the solar lease on the Alice household so that it's a win-win situation.
Okay, so in essence, there's no state money involved.
There's no state money involved except for startup costs and the staff.
For the staffing. How would you recruit people to participate And how much money would they have to contribute?
So the beauty of it is they can size their investment. Ideally, they could size their investment to their own electric utility bill, right? So then based on the benefits that they receive, it would offset their electric bill. It's really up to them. There's going to have to be a minimum investment amount that has not yet been determined, but it's not, it's kind of like crowdfunding.
Okay, but they would have to come up with a lump sum, right?
Right.
Even if it is what, like say, I'm paying $200 a month on my electric bill, right?
Yeah.
I would have to figure, or someone would figure out, okay, how much you would have to invest in order to get $200 a month to offset your electric bill.
Correct.
And would that cover the costs for that capital, right?
It's an investment, so
Yeah.
it's not for everyone. The condo owner would have to make that decision, like if they were going to invest in stocks in the equity market, right? Same thing. It's
Okay.
just that the purpose of it would be to help lower the energy burden for low-income households, and they get the investment return in the clean energy infrastructure that was installed.
So to generate $200 worth of credit back, how much would have to be invested?
I can get back to you. I didn't run the numbers on a specific dollar amount, but just so you know, whatever their investment is, the condo owner will get their proportionate share of the federal tax credits, state tax credits, and then the cash flow from the lease.
Well, isn't there a phase out of these tax credits?
No, so the IRA that was passed last year reinstated the federal tax credits to 30% for 9 more years, I believe.
Okay. And that tax credit goes to the investor.
It goes to the system owner, and the investor will have their proportionate share of the system ownership.
Well, weren't there programs like this before?
There
Where
are
people could invest in solar systems?
There are currently programs like that. This is specifically to enable condo owners who don't own their roofs and they can't install their own solar to participate in clean energy.
But I thought there was a program that allowed anybody to invest in a community solar system.
So anyone can subscribe into a community solar system. Yes, you're correct.
But that's the same concept, right?
It's the same concept, except in that case, they actually get the credit on their utility bill. They get their 15-cent per kilowatt hour credit on the utility bill.
Okay, members, are there any further questions? Seeing none, we'll take a short recess for decision-making. Recess. effective date. Any questions here? Okay. HB 1637 relating to workers' compensation law.
Hold on. Did you want to? Oh, sorry. I thought we were going through the actual.
Oh, no. We're just still DM.
Sorry.
Yeah. Good afternoon. Reconvening the House Committee on Consumer Protection and Commerce for decision-making. First, we'll be voting on HB 2553 HD1 relating to pharmacists. Chair's recommendation is to pass this measure forward with technical amendments needed for clarity, consistency, and style. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 2553 HD1, recommendation is to pass with amendments, noting, Chair Nakashima excused, Vice Chair Sayama,
Aye.
Representative Amato excused, Representative Belatti,
Aye.
Representative Hasham's excused, Representative Hussey Burdick,
Aye.
Representative Gates,
Aye.
Representative Lowen,
Aye.
Representative Onishi votes aye. Representative Tam is excused. Representative Perrick. Okay, Chair, your recommendation is adopted.
Thank you, members. Moving on to HB 1943 HD1 relating to health insurance. I'm recommending that we I'm sorry. I'm recommending that we defer this measure. I think through the testimony from Budget and Finance, it's fairly clear that there's significant fiscal implications, potential fiscal implications for this measure, and there's also the issue of collective bargaining. So Chair's recommendation is to defer. Moving on to I'm sorry.
I'm sorry.
Oh, yeah, okay. Moving on to HB 1686 relating to insurance. Chair's recommendation is to pass this measure forward as is. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 1686 HD1, recommendation is to pass as is, noting the absence of Representatives Nakashima, Amato, Hashim, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you. Next, we'll be voting on HB 1637 relating to workers' compensation law. Chair's recommendation for this measure is to adopt the proposed amendments from Department of Labor and Industrial Relations. This will be striking out language from page 1, line 16 through page 2, line 4. We will also be adopting proposed amendments from HMSA, notably on page 1, line 9 to 11. We'll be deleting the term may and replacing it with shall. And that is all the amendments. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 1637 HD1, recommendation is to pass with amendments, noting the absence of Representative Nakashima, Amato, Hashim, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you. Next, I'm voting on HB 1673. We'll be sure to use consistent language, replacing the term trash with solid waste. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 1673 HD1, recommendation is to pass with amendments, noting the absence of Representatives Nakashima, Amato, Hashim, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you, members. Moving on to HB 2552 HD1 relating to employee benefits. Chair's recommendation is to pass this measure forward as is. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 2552 HD1, recommendation is to pass as is, noting the absence of Representatives Nakashima, Amato, Hashim, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you, members. Moving on to HB 2606 HD1 relating to transient accommodations. Members, I think there's still some work that needs to be done on this measure. I'd like to defer decision-making until next week, Thursday. Okay, moving on, HB 2195 relating to building industry professionals. With the concurrence from the introducer of this measure, we'll be deferring this as it still needs some time to be worked on. Next, we'll be moving on to HB 2801 relating to commercial property assessed financing. Chair's recommendation for this measure is to adopt the proposed amendments from HGIA's written testimony in Section 3. We'll also be defecting the date until July 1st, year 3000. Members, are there any comments? Okay, seeing none, Representative Onishi for the vote.
HB 2801, recommendation is to pass with amendments, noting the absence of Representatives Nakashima, Amato, Hashem, and Tam. Any members voting with reservation? Any members voting no? Chair, your recommendation is adopted.
Thank you. Moving on to HB 2686 relating to the stabilization of property insurance. Members, this measure is a work in progress, so we'll be defecting the date to July 1st, year 3000. We'll also be adding any technical amendments needed for clarity, consistency, and style. Members, any comments? Okay, seeing none, Representative Onishi for the vote.
HB 2686, recommendation is to pass with amendments, noting the absence of Representatives Nakashima, Amato, Hashem, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you. Moving on to HB 2685 HD1 relating to energy. Chair's recommendation is to pass this measure forward as is. Members, any comments? Seeing none, Representative Onishi for the vote.
HB 2685 HD1, recommendation is to pass as is, noting the absence of Representatives Nakashima, Amato, Hashem, and Tam. Any members voting with reservations? Any members voting no? Chair, your recommendation is adopted.
Thank you, members. Finally, we're taking up a measure that was deferred, HB 2085 relating to residential landlord-tenant code. Between the hearing last week and now, I've been working with stakeholders and departments. Unfortunately, we couldn't come to a consensus on this measure, so we'll need to work this over the interim, so I'll be deferring this. With that, this committee hearing is adjourned. Thank you.